I'm excited to pass the word to our next participant. It's Pynk, another wealth management solution. So hi, Rupert.
Hi, Marina. Let me share the screen here and get that up. We've also got Seth. Are you off mute now?
I believe so, yes.
There we go. We can hear you there as well. So, yeah, Seth, why don't you fire away?
Okay, so yeah, ladies and gentlemen, thank you very much for having us here today. Before we start, I'd like you please to dispel any thoughts that you might have about what an investment app is and does, because our unique technology and business model creates a new category of social investing, and it enables people to work and learn and earn together.
You see, the problem that we're trying to solve here is pretty simple. Retail investors are frankly getting screwed. Meanwhile, professional fund managers are really only performing for 3, maybe 5 years and then pretty much implode. There's got to be a better way, or at least that's what we thought.
And surprisingly, that is where we come in, because our portfolio is actually controlled by tens of thousands of fund managers, our users, who all contribute to a proprietary AI that seeks to find the experts within that community at a specific time and for a specific asset. And we do all of this whilst providing access to the portfolio for free to anyone, anywhere.
So you may have heard of the wisdom of crowds, and our technology is inspired by its bias reduction and its proven forecast technique, but we build upon this. So our AI continually seeks individuals within inside our community in either individual basis or a small group that are consistently accurate. And then we use this data to decide who to listen to and who not to listen to. And then we rebalance our portfolio for best performance based on that data. So we started running our proof of concept portfolio back in February of 2019, and to February of this year, we've done a 15% return. And year to date, throughout the COVID period, we've done 11% return already.
So we have a really unique business model that means that we can be free for everyday investors as long as they participate in the community. And we use the data that they drive to produce reports for tier 1 institutions on the one hand, as well as managing capital for the likes of family offices on the other hand, which generates significant recurring and scalable income. And on the note of everyday investors, that is really where Pynk shines, because we're growing organically at 9.7% weekly, and we've built up to over 30,000 users so far on 0 marketing budget. Our cost of acquisition is way under $1.
So we're neither somewhere where you place your money and forget, nor are we a trading platform where statistically you will go and lose most of your money. We provide an alternative where you can participate without the overbearing responsibility of being correct on every trade.
And so, of course, this wouldn't be possible without the team behind Pynk. Together, we've built multiple startups. We've had successful exits, including myself, while on the financial side, our CIO and AI lead come from some of the largest financial institutions in the world.
Right now, we're raising £2 million on a convertible note, 50% of which is already allocated, and our overfunded crowdfunding campaign is live on Seedrs right now.
So thanks for listening to us, guys, and we would be delighted to hear any questions you might have.
Hi, Rupert. Hi, Seth. So my question is the wisdom of crowd more of a marketing tool or an instrument to beat the market? And the follow-up question would be, I mean, what percentage of your portfolio is driven by the wisdom of crowd?
So the really easy answer to that is that we do use the wisdom of crowds as an important data point, but it is not the main driver of where we place funds. And that's simply because the wisdom of crowds on its own on a moving target is not accurate enough. It is it provides an accuracy of between sort of 3 and 5%, but we need to close that down to sort of 1.5% if we are looking to trade on it. And then in terms of how much we apply of the wisdom of crowds in our overall portfolio, at the moment it's between 5 and 20%, and we have discretionary management under our FCA regulations to move that. But we are planning over time, over the next 2 to 3 years, for it to be the full 100% of the fund. And there's a new release coming next week that will drive a lot of that technology.
But using the wisdom in crowds it's certainly it's beneficial to marketing, but it's at the core of the business. We're empowering everyday investors to have an input, to have a say on where their money goes, which is something that's been quite difficult. You either put your money into a pre-built portfolio and you have no say whatsoever, which can bring up all kinds of ethical concerns and other disagreements. And at the other extreme, users are left to fend for themselves entirely. And we see that with many of these trading platforms, that puts them at really high risk. So we're trying to fix users having to go to those two extremes, and we're using it in a way that does actually benefit the investment decisions.
Well, looking at your financials, you state that you have no fees except the £25 account minimum and so on. But how do you make money?
So we charge institutional investors for managing their capital. So we have a few products based off the data that we're unable to serve to retail investors because of the risk profiles. So we use those to generate money that provide everyday investors with zero fees.
Could you talk a little bit just about why institutional investors would use the product? Typically, institutional investors have a kind of inbuilt bias against this kind of product, as a lot of people in the institutional investors get paid handsomely to make the decisions you're going to be making.
Well, yeah, I mean, actually, a lot of the larger investors have, certain ways of investing, and the fact that we are very different and counter-cyclical and almost an alternative fund strategy. When we're managing AUM, it's very attractive for some of these bigger players to put small amounts of money into our portfolio. We're already talking to one of the top 5 global banks. We're in advanced discussions with them, and we have every confidence that we will be picking up large amounts of investment over time. On the other side of things, we have the data that we're selling, and we're doing that often with data brokers. And again, there's a huge interest with this because we're a unique source of data and signals, whereas most of the other signals out there are just new ways of processing existing data. So again, we're quite well progressed with those discussions, and it ultimately comes down to a large amount of differentiation with what's out there already.
And what was your current AUM?
We're at 100K AUM. We're on track for about 10 million AUM, with roughly speaking, about 50 million or so in the pipeline, which we'll expect to close around 10 by the end of the year.
Thank you.
So
All right, guys, I have 2 questions.
Yeah.
All right.
The last one, because
okay. Right, just a quick one, because I just came from FinTech. We organized a FinTech webinar. One of our portfolio companies is doing their equity crowdfunding now. They are doing robo-advisory. So my questions on one is, how do you compare a crowd, invest together, compared to a robo-advisors who are emotionless, and they actually do a lot of data analysis and of course analyze data based on and based on that they invest on behalf of investors. Second question is, if I'm a fund manager, why do I need to follow the crowd? Because I have certain information or expertise, and I make judgment different from the crowd. That's why I outperform the normal investors. Okay, that's my 2 questions.
So yes, on the last point, it's true that fund managers tend to outperform everyday investors. Of course, that's true. But the stats that we showed earlier show that fund managers do not beat the market over time. So you're better off generally with a tracker, which is why we've seen such a rise in passive investment over the years. But actually, so we don't represent a choice between robo-advisors or AI and fund managers, who are the experts, and the crowd. We're the only system that actually incorporates the strengths of all of those 3 forms of intelligence into one decision-making system. So we take what comes from the crowd. We don't generally do what the average of the crowd says. That's wisdom of crowds, which we're inspired by, but we've significantly advanced on that by using our AI to spot patterns in the market and to work out, based on individuals within the crowd, looking at their individual track records, which small percentage of those are likely to be correct at any point in time. That then gives a filtered signal to our expert fund managers, and they can then make their final decision with that data. So if you look at a typical fund manager, they wouldn't have that opportunity. And if you say, even someone that's very skeptical about the value of this information, if you say to them, okay, would you prefer to have that information and choose what to do with it, or not have the information, they will all say, I believe I'd prefer to at least have that information and have the opportunity to incorporate it into my decision making.